All right, today we're cracking open a fascinating case. We're doing a financial autopsy on a stock called MTC. Why? Because it just made a move so absolutely massive, it could literally make or break a fortune in a single day. So what on earth happened here? Let's dig into the evidence.
Yeah, look at that number, 626.97% in one day. That's not a typo, folks. That is the kind of explosive gain that stops everyone in their tracks and makes you ask, how?
So that's the real question, isn't it? When you see a surge like this, what are you actually looking at? Is this the ground floor of a rocket ship to the moon, a life-changing opportunity? Or is it a classic trap, a bubble that's just waiting to pop and wipe people out? We're going to follow the data piece by piece and see where this investigation takes us.
Okay, every investigation starts with profiling the subject. We need to get a baseline. We have to understand just how out of the ordinary this event really was compared to how this stock usually behaves.
Think of a stock's moving average as its normal cruising speed on the highway. For MTC, its long-term 200-day average is about $1. Right now, it's trading at $2.21. So picture a car that normally does 60 miles an hour suddenly blasting past at over 130. It's not just going a little fast. It's a wild, almost unbelievable deviation from its own normal behavior.
Now this is where it gets really interesting. These first clues tell a strange story. The trend strength and ADX scores, they're basically saying, yep, this upward trend is the real deal. It's powerful. But then you look at the beta, it's incredibly low. And that means this stock is completely marching to the beat of its own drum, totally disconnected from what the rest of the market is doing. It's a true lone wolf.
An explosion this big needs a ton of fuel. And in the market, that fuel is volume. The sheer number of shares changing hands. So for our next step, we've got to follow the money.
And here's our fuel tank. The trading volume recently exploded by over 1,300%. Just let that sink in for a second. This is not a few people getting excited. This is a massive crowd rushing in, a huge influx of activity that's acting like rocket fuel for this launch.
This number here, the money flow index, is all about buying versus selling pressure. A score of 99.67 out of 100? That is about as extreme as it gets. It's telling us that the buying pressure is just completely overwhelming. Almost every single dollar flowing into MTC right now is a buy vote. It's a total landslide.
So let's be clear, this is a stampede. The volume is insane. The buying pressure is through the roof. But that leads us to the most critical question of this whole investigation. Is this a stampede of smart investors who see something nobody else does? Or is it a mob driven by hype and pure frenzy?
And this is where our investigation takes a huge plot twist. Because just when all the evidence seems to be screaming that this rally has legs, a whole new set of clues pops up that point in the exact opposite direction.
Before we look at that conflicting evidence, we need to understand this key term, overbought. Basically, it's a major technical warning sign. It means a stock has gone up so far, so fast, that it's stretched like a rubber band. It doesn't mean it can't go higher, but it does mean that gravity is starting to pull down, hard. The risk of a sudden sharp drop gets way, way higher. And this slide just lays out the battle perfectly. It's a technical tug of war. On one side, you've got the bulls, and they're pointing to that incredible momentum and all the money flooding in. But on the other side, the bears have some serious ammunition. The RSI indicator is screaming overbought, and the price has detached from its own trend line in a massive way. The two sides are in a dead heat.
So with such a perfect split in the evidence, we can't just point to one outcome and say that's it. Instead, what the analysis does is narrow it down to the three most likely scenarios that could play out from here. So what the data suggests is that the most probable outcome, at 50%, is something called consolidation. That just means the stock is likely to trade sideways for a while. It needs to catch its breath while the bulls and bears figure out who's really in charge. A continued rally from here is less likely, at 30%, and a sharp crash back down sits at a 20% chance. After a move this big, the market kind of has to pause and digest what just happened.
So how will we know which of those scenarios is actually happening? Well, we watch these specific price levels. Think of them like tripwires. If the stock can break above 284 and stay there, that could trigger the next leg of the rally. But, and this is a big but, if it breaks below that key psychological level of $2, that's a huge warning sign that a correction is underway, with the next likely stop around 158.
All right, we've looked at all the evidence, we've seen the incredible momentum, the tidal wave of volume, and the flashing red warning signs, so our investigation has reached its final verdict.
And here it is, the final conclusion from the source analysis. It says MTC is in a speculative bubble phase with high reversal risk. When you put all the pieces together, the extreme price jump, the massive deviation from the norm, those deeply overbought readings, it all points to one thing. This is the ultimate warning from our investigation.
So we'll leave you with this to think about. Now that you've seen all the evidence, the shocking 627% gain, that enormous surge in volume, or those glaring overbought warnings, which of those clues do you think tells the real story here? Which one matters most? Thanks for joining us.